It's about that time of day again. My name is Joseph. It's Wednesday evening, June 21st. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish, but a double overshoot of the channel low tells us to wait for the most reliable selling opportunities up at the battle zone waiting overhead. The S&P is range-bound with a bear bias and stuck right at yesterday's low. The sellers keep projecting those lower prices, and our plan is to sell above the range high using those buyer failures on Thursday. Gold is bullish with a grind break channel, so we're looking for traps in the battle zone tomorrow on the way back up to retest yesterday's high. The euro is bullish with a wedge, maybe a spike in channel. Either way, we're looking for a two-legged pullback off the highs for the next round of buying opportunities tomorrow. And of course, the FDAX is range bound with a bear bias, so we're looking for buyer failures using the two-try rule up above the high of that range tomorrow. Guys, we got a great newsletter in store for you guys and gals tonight. Got plenty of reliable trading opportunities set up for tomorrow. Before we jump in and put the plan together for Thursday's session, I want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here on the blog, don't forget, join the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Follow me on my many different social media channels, StockTwits, Twitter, Facebook, LinkedIn. Pick your flavor, right, and follow me on social. Download those charts. How easy is that? Below the video tonight, right where it says click here to download today's charts, make sure you grab those charts and have them ready for your trading day tomorrow. And then, of course, please don't forget in the upper right-hand corner, if you haven't done so yet, make sure you grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee you that. And please don't forget, I'm always here standing by to answer all your questions. If you have any questions along the way, hit me up on the live support tool on the homepage and on the right side of the blog at Sideways Markets. Had a great day today. Boy, oh boy, really had some great guidance in last night's newsletter. Hope you guys were able to use the newsletter from last night on gold, on crude, on S&P, on euro. Boy, oh boy, markets are just, from what I've been told, the markets are pretty tough out there right now, but our strategies continue to perform incredibly well. Hope you guys had a great day out there. Let's get ready for tomorrow. Tomorrow, Thursday, June the 22nd. As you can see here, tomorrow, another day pretty wide open. We got some major news tomorrow at 8:30 a.m., pretty much your typical Thursday morning. Jobless claims, and of course, we got retail sales, right, from our good friends, the North. Jobless claims hasn't moved the markets around in years. I mean, I can't think of the last time that jobless claims really moved the needle for us very much. So although we do have some big news tomorrow morning, 8:30 on the schedule, I really don't expect to see much more than just opening bell, 8:20 gold and currency, 9 o'clock, right, on the energies, such as crude oil, and of course 9:30 opening bell, right, for the S&P and the rest of the Eminis tomorrow. We, of course, at the top of the hour at 10 o'clock, lunch transition at 11:30. We'll go over the entire plan tomorrow morning, of course, in our trade room, starting off at 8 o'clock Eastern Time. Look forward to seeing you guys there. Other than that, though, not a lot of major news on the calendar here for tomorrow. And, of course, we'll talk more about Friday's peppering of news, right, later on in tomorrow night's newsletter. Let's jump right in here, guys. We got a lot to cover here tonight. How about some crude, S&P, gold, euro, DAX? Let's break this thing open. Crude is bearish with a double overshoot of those channel lows, which tells us to expect a rather significant correction higher before we find sellers to re-enter the market with their targets going back down to that low. Now, one thing that stands out on this chart is the multiple levels of resistance from that prior day low, 43.03, the reversal line, and of course that measured move. Those levels of resistance up top will make for an easy target for the short-term bulls and an excellent place to sell high for the long-term bears. Now, as I mentioned earlier on in the intro, we had projected this as being your wedge target, if you recall from last night's newsletter. If you watched last night's newsletter, make sure you go back and watch last night, because we very accurately anticipated, right, this big drop back down. So very, very good job out there for all the traders who followed the guidance from last night's newsletter. Now, most important thing right now, you can see we have a bear channel. Most actionable information right now is this bear channel. Now, you'll notice this channel holds together pretty well at the beginning of the afternoon and then falls apart, right? And you can see here as the market goes 1 and 2. In fact, you could even call that 1, 2, and 3 a triple overshoot. Now, a triple overshoot is a pretty big deal. A single overshoot, a market will correct and then drop right back down. But a double or a triple overshoot, well, bottom line is when I see a single overshoot, that tells me that's a gift, right, from the trading gods to take your profit on your short positions is going through the low of that channel. When I see a double overshoot, I think these sellers are probably going a little bit too far, too fast, right? When I see a triple overshoot of this market, that basically tells me that whoever is in the market right now will be very smart to grab everything they can get their hands on and get out of this market. I wouldn't say be a buyer yet, right? But if you're short, right, that's your sign now to get the heck out of this market because it's probably going to snap back as sellers start aggressively taking their profit. So big clue with this overshoot at the low of that channel. Call it a double, a triple, heck, I don't care what you call it. That's a big overshoot as it kind of blows right the low of that channel. So think about this as a pendulum. The pendulum swings below and now it will swing back up. Most of the time though, when we see a big double overshoot like this, normally it will correct, try to go back lower, and then continue going higher. Now, that's where we'd like to see some buying opportunities in the short term, and then look for those selling opportunities, right, in the long term tomorrow. Now, obviously, we're still bearish right now. We can't give this to the bulls just yet. But bulls, keep an eye out for the buyers, right, to take control here for tomorrow. And really what we're looking for here tomorrow is really a couple different scenarios here. One would be a move up, stabilize, and then back down, much like we saw in today's session on crude. A second scenario would be up and blowing right through that battle zone, right? That is obviously a possibility here for tomorrow. And of course, the third possibility for tomorrow is I might be completely wrong about this, or the bears may be a little bit too strong on this, and it may just simply trap high and then collapse right back down to those lows here. Let's plan both or all three of those scenarios. First of all, if we do go higher and we're looking to be a seller, there will be a two-legged correction on here. We want to use that two-legged correction, right, to sell back down off of that high, right? That's going to be the most dramatic move back up, right? In the short term, though, a buyer failure off the moving average, up and back down. That, of course, would be an option there for the sellers as well. Most important thing right now, though, is the sellers do have control. So any buyer failure as the market goes higher will be seen as a selling opportunity to sell this sucker back down. We may also something like this, right? It may also, of course, run higher, two-legged correction back up, buyer failure, and then, of course, into pullback, right? Giving you literally 1, 2, and 3 opportunities to either grab it aggressively on the two-legged pullback up around the measured move, or second scenario, right, would be a buyer failure, and then of course the third, right, final would be the pullback on the way back down to retest that low. That's what we're looking like for the sell side as the market goes higher. Now, if the buyers can take control, new higher high, hold the pullback, new higher high, hold the pullback, and explode higher here. This, of course, not drawn exactly to scale, but bottom line is if the buyers can get a new higher high, hold that pullback to that moving average, and then explode higher on strength, it'll be very difficult for me to justify selling just because we're at resistance, right? We don't want to just sell at resistance. As we go higher, we're looking for the buyers to fail as we can make that turn right back down, right? So buyers, look for that new higher high, break above that new higher high, hold that pullback to the moving average, and that will give you the green light, much like we saw this morning on crude oil, right? The early part of the day was spent buying, right? The latter half of the day was spent selling. We talked about that last night on crude. Short-term buying opportunities going up into the battle zone, and of course, watching for that turn and then looking for that sell back down. So buyers, up and through. What you want to be looking for here for the buy side as we go up into that battle zone is new higher high, hold the pullback, and then look for some traps, right? Look for some traps. You're not going to want to buy high because those buyers are going to run right into those sellers coming in at the measured move, at the prior day low. If the buyers do take control of this market, Don't buy into the battle zone. Look for those traps and pullbacks, right? Seller failures below the moving average, but make sure you get those buyers in control first. New higher high, hold the pullback, and then we can start looking for this now as a new bull channel, right? As our new set of measured moves, right? And we'll go follow that trend accordingly. The objective right now for the buyers is to get back up and retest yesterday's high at 44.20, so keep an eye on that. But again, make sure we wait for the bulls to take control first. Objective for the sellers is up and then, of course, back down to retest that low. Most important thing is the low, right? That low down around 42, that's the objective. So the last scenario you want to keep in mind for tomorrow is, what if the price just sinks back down? If we sink back down, we don't want to sell into that low. I would always recommend find those levels of resistance, trap high, and back down. As we go lower, if we don't get this correction tomorrow, we're watching closely for traps above prior swings. That way we don't need to sell low. So again, price goes lower. If it tumbles lower, just stick to traps, right? Stick to traps. Look for that price to break up above a prior swing. Stick to traps to avoid selling low. And then, of course, that's as far as it goes, right? As far as it goes lower, trap high. I don't care how far it goes, right? Trap high. Just make sure as the market does drop back to that low, make sure we're not chasing that move back down to that low. Sellers have control right now. They're trying to retest that low around 42. Buyers have to prove it. Higher high, hold the pullback on strength. Watch out buying into that battle zone overhead. Look for traps for the bulls, right, rather than buying into that battle zone overhead. And again, the bulls are trying to make a run back to that 44.20, but they got some work to do first. Don't forget, we'll be trading this strategy tomorrow morning in the trade room, 8 o'clock Eastern time. Hope to see you guys there. S&P is range bound with a bear bias and sitting on yesterday's low, which tells us that sellers are rejecting the idea of lower prices, but the bulls haven't been able to take control yet. This tells us that sellers will gladly sell up above that range tomorrow, but they'll reject selling below the range until we see some more proof. The plan is to sell the high of that range with buyer failures, and if you have a bit of a taste of risk, look for the buying opportunities with seller failures and the 2-try rule at the lows tomorrow. As you can see here, market is really stuck in the mud around that prior day low. Not a huge surprise, right? After that market kind of dropped like a rock yesterday. You can see this now as a bear market into a trading range today. And every time the market went up, right, the bears were waiting up top there to sell it right back down. Great example of a 1-try, 2-try outside of that trading range. We talked about this last night on the newsletter. If my guidance last night on the newsletter was, if it kept going lower, don't sell low, look for a trap, and you can see that trap right there. Beautiful example of a trap high. Because again, as we came out of that range, as we came out of that nosedive from yesterday, you're not going to want to sell all the way down here. Not after a whole big day on the downside. Look for that trap high, right, and that will give you that sell right back down again. So bear bias right now with that trading range. Anytime we have a trading range on a chart, we're thinking buy low, sell high, avoid that middle, focus on failures using the 2-try rule. So bear bias, right? That bear bias makes this a relatively difficult market to sell low right now, because you can see every time the market went lower, the sellers pretty much rejected the idea of those lower prices. I would love to get the market up, 1-try, 2-try, and back down. Very similar to what we saw back here. Would love to see the same situation up at those highs tomorrow. That would really be ideal here for the Emini traders. As the market goes lower, we already have 1-try, 2-try. Now again, remember, this is a bear bias market, right? Bear bias range. What that tells me is that being a buyer at these lows will not be as reliable as being a seller up at those highs. So like I said earlier in the intro, if you have a little bit of taste of risk tolerance here tomorrow, you're more than welcome to pick this bottom, but be aware, again, the market is bearish, right, inside of this range. So 2-try rule in play, 1-try, 2-try. Check out that measured move. That measured move would be a great spot there, right, for a little trap low and a buying opportunity back up. Again, not as reliable as selling, right, but definitely an option on the table here for tomorrow. If we do push lower, right, if we do push lower, what you're looking for first is to see this market hold that pullback. If they can hold that pullback and break free of that range, we're good to go now, looking for that next right, follow through in a bear market. Most important thing though is once we see them hold that pullback to get out of this range, right? Because remember, if they can't hold that pullback, right? If they can't hold it, they're going to be buyers buying that failure back up into that range. So it's really important we don't just try to sell that breakout pullback. Don't forget, I'm going to be in the trade room tomorrow morning at 8 o'clock Eastern time, executing this strategy with all of our advanced members. Hope to see you guys there with me. And while I'm out of here, don't forget, if you want to learn more about our strategies here at School of Trade, go right to the homepage of schooloftrade.com, join the free trial. You're going to learn a ton about the who, what, where, when, and why, learn all about the patterns we use here at SOT. Join that free trial, right? Come out and join me for a free pass in the trade room. And don't forget, while you're here, grab a beginner, intermediate, or advanced levels of membership and hit me up. Live support anytime you guys have questions. I realize that most websites are automated these days with pre-recording messages and robots answering the call, right? While the rest of the industry is giving you pre-recorded automated robot messages, I'm always picking the phone. I'll always be here to help every step of the way. If you put the effort in, I'll meet you halfway every step of the way like I do with all of my clients. Guys, great job today. It's been a great fourth week of the month. Got a big day tomorrow. You guys have a great plan for it. Right, I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, same time, same place tomorrow. You got it. Adios, amigos. Bye-bye.